The 2021 financial year was a very strong year for our members, particularly those in the default option and the higher risk options, for example, high growth and Australian shares, global shares. The MySuper option returned 18.14, which was the highest one-year return since the launch of MySuper and above median relative to the super rating surveys. And this is driven off the back of good returns in Australian shares and global shares. So over the year, the biggest impact in terms of those very good returns was really the Australian share market and the global share market returning really good returns in the 20s and some of them in the 30%. That was driven off the back of markets doing well because of low interest rates and the various fiscal stimulus, and particularly coming out of the first lockdown in COVID. So really strong returns in the share options and in the Aussie shares, global shares, a little bit in the infrastructure options, and also in our sort of specialist bespoke credit portfolios. We always say this, whether it's 1 year, 3 years, 5 years, and particularly in an unusual year, but in terms of how we manage this, we do believe in running well-diversified portfolios and not being exposed to one particular type of investment or one particular type of strategy. So therefore, if you look at our various multi-sector options, whether it's conservative right through to default, MySuper and high growth, we really like a portfolio that has Australian shares, global shares, fixed income, cash, unlisted infrastructure, unlisted property, and then specialist absolute return and credit and special situations type investing. Also a little bit of venture capital. So the strategy has not changed, whether it's COVID or whether there are other conditions. We like to run well-diversified portfolios so our members can participate in multiple sources of return. What can we expect this financial year? First, we would caution in terms of putting too much emphasis on one-year returns. We do think one-year returns vary a lot because conditions change, and we always ask our members to have a longer-term strategy and think about the whole cycle. But in terms of the next year, I mean, clearly the thing that's impacting at the moment is the Delta strain of COVID, the increase in lockdowns, and how governments respond to that. And we believe the response to that will be further low interest rates for the foreseeable future and more fiscal stimulus to help really businesses and people who are impacted by that lockdown. But again, I strongly emphasize one-year returns and forecasting is very difficult, and we don't think it's always important to think longer term in terms of how you should manage your overall retirement strategy. At the moment, we are sort of in the midst of increasing global Delta strains around the world, and having the effectiveness of a vaccine rollout and how the vaccine rollout affects in keeping cases down. But we do believe over time economies will open up and the world and the economic growth will come back strong again as we all recover from the current COVID strains and lockdowns. So the short term, very mixed, but the medium to long term, we believe both Australia and the rest of the world is well placed to continue growing and to get to some sense of normality. Outlook for the local Australian economy. In the short term, it's a bit noisy, unfortunately, with the lockdowns across the eastern states. And we are perhaps looking at an increased scenario of a technical recession, which is 2 quarters of negative GDP growth, particularly in parts of New South Wales and Victoria, seeing when their states finally open up. It's all about vaccine rollout and effectiveness. So we do think the economy from here to November, December, unfortunately, will be impacted. So there's a short-term pothole in terms of what's happening with COVID. Medium to longer term, we think the current policy stance of very low interest rates and fiscal stimulus means Australia will come out of this 2022. So we do see better conditions from 2022 onwards. It's just between now and the end of the year in 2021, we are seeing slightly weaker conditions. Taking that into account, we do expect a stronger economy 2022, 2023, 2024. And over time, we should see interest rates rise as the economy recovers from the current situation. Biggest issues that we see, there's three obviously major issues that we're looking at in terms of what's happening in the Australian economy and global economy. We've discussed a little bit about COVID and getting through COVID and having the vaccine effectiveness. The second one is there are some geopolitical tensions, unfortunately, in the South China Sea between China and various factions, whether it's trade war, whether it's chips. So a lot of the computer chips are made in Taiwan and South Korea, and there's cyber security. So a lot of these issues are manifesting and bubbling in the background. And then the third thing is we do think we're in a world of very low interest rates, and coming out as the economies recover globally, including Australia, we will see higher rates going forward, and how the markets adjust to those higher rates will be interesting in terms of what they do for future returns, which we believe will be lower given the recent rise in markets that we've experienced the last year or so.